Welcome back to another episode of 5-Minute Small Business Tips, where you give us 5 minutes and we'll make you a better business person. I'm Stuart Goldstein, CEO and President of Goldart Consulting. We are small business specialists. I have a 35-year business career with both Fortune 500 companies and on Wall Street. But for the last 24 years, I have worked exclusively helping small businesses. Today's tip comes from our book, Small Business Tips to Live By. It is number 3 in the financial management section. And the tip: your costs are always the first basis of your price. We're going to go into the tip in depth, but first, as always, let's define our terms. Costs. These are the cash outlays, expenses, necessary for the business to incur to run the business on a day-to-day operational basis. Typical costs are salaries, insurance, rent, and also product development costs, materials necessary to build our product. All of these are costs. In business, there is a difference between costs and purchases. Mainly, it's in the nature of what the money was spent on, but also it is about how we account for certain purchases that make them costs. Certain purchases for long-term items are assets, and they get treated differently in an accounting perspective. Now let's go back to our tip. Your costs are always the first basis of your price. Coming up with price is always difficult, whether it be a product or a service. Yet one cannot overestimate the importance of getting the pricing of the product and service correct. It is an essential element of both the marketing and financing of a company. Many factors play into the final price that a company sets for its product or service. All industries are different, and all products within an industry are different. And there are many factors that need to be juggled, that need to be calculated to end up at what becomes a final price for a service or product. Some of the factors apply to all industries, most notably competition. Where is your competition at? Market forces. Is there some strike or other element that's affecting the pricing of your product? Supply and demand. Some industries have so many people delivering the service that it is difficult for you to have a price far different from where the market is. And lastly, of course, the economy, which can affect what price you're looking to deliver your product or service. But the first basis, the first element that you need to analyze in order to price your product or service is always your costs. Each company's situation is different, and you need to understand the factors that are driving your company and your products. One cannot just base their price based on their competition, because each situation is different. While your costs are the first basis of your price, they are not the sole factor affecting the price. Final pricing is a function of all the elements: your costs, market situation, supply and demand, your competition. I'm just talking here and emphasizing the need for costs to be your first basis. Let me introduce a new term here: variable costs. Variable costs are those expenses that vary specifically with revenue. What that means is each time we sell 1 unit of revenue, certain expenses increase. Variable expenses are different from fixed expenses in that fixed expenses do not vary with revenue, and as we sell an additional unit, fixed expenses do not change. Examples: rent, salary, They do not change each time we sell an additional unit of revenue. To drive the point home, let's take an example. Let's say we sell pencils. In theory, each time we sell one pencil, we have to pay some costs that are directly related to the pencil. The pencil has an eraser. There's graphite in the middle of it. There's wood around it and a metal ring and other elements. Each time we sell one pencil, all of those expenses, all of those costs are incurred. By contrast, every time we sell one pencil, our rent does not change. Our salaries do not change. That is the difference between variable expenses, in that they vary with each unit sold, versus fixed expenses, which do not vary with revenue. Here's the key point of today's tip. To do your pricing right, you must first complete a thorough, detailed, specific, variable cost analysis on what you want to sell. You need to understand every single cost that goes into you delivering and selling your product to the end user. It is of the utmost importance that you capture all of the variable expenses that increase with an additional increment in sales. Often we think of raw materials and packaging, but there are additional variable expenses, commissions, delivery fees. Each of these elements vary with an additional unit of sales, and they need to be in your thorough variable cost analysis. So in conclusion, again, your costs are always the first basis of your price. There are other factors that will play into the ultimate final setting of your price for your product or service, but we must know our variable costs first. That's all for today. A friendly reminder: great business people aren't born, they are made. They are made through continuous growth-directed study and practice. No one gets great at anything without working at it hard. The same is true in business. To become great at it, you must take on the challenge of study and practice. That's all for today. Please stay tuned for our next video in the series. And as always, please like, follow, share this video with anyone you think it can help, and please subscribe to our channel so you don't miss the next video in the series. If your small business has any issues you would like to discuss, please feel free to reach out to us. The information will be in the video notes. And our book, Small Business Tips to Live By, is available on Amazon in both paperback format as well as Kindle ebook. This has been 5-Minute Small Business Tips. We'll see you again in the next video.